It looked like the future of fashion. But behind the luxury brands, subscription rentals, and billion-dollar startup valuation, prosecutors said the numbers were almost entirely fiction. But to understand how a fashion tech dream became a $300 million fraud case, we need to go back. In 2011, Christine Hunsicker founded Gwynnie Bee, a subscription clothing service operating out of a New York apartment. It targeted plus-size women, but Hunsicker saw a bigger play. By 2018, she transitioned the company into CaaStle, a business-to-business platform that let major retail brands outsource their rental programs. To investors, this was a tech revolution valued at over $1.4 billion. Yet federal prosecutors later revealed a stark mismatch. While the company projected explosive growth, court filings show the underlying numbers were almost entirely fiction. Now, here's the part that makes this different from an ordinary startup failure. Hunsicker was not an ordinary first-time entrepreneur. A Princeton graduate, she had already served as chief operating officer at Right Media, which Yahoo acquired for $850 million, and at Drop.io, which was acquired by Facebook. This elite tech pedigree made her a magnet for venture capitalists. When she pitched Gwynnie Bee as a smart, data-driven subscription wardrobe service for plus-size women, marquee investors like Bill Ackman and Henry Kravis eagerly backed her. In 2018, she pivoted this operation into CaaStle, a white-label platform offering clothing as a service, a subscription model where brands lease wardrobes directly to consumers. To the public, Hunsicker was a visionary, named to Crain's 40 Under 40, leading a legitimate logistical powerhouse. Instead of buying clothes once, customers could rent them through a subscription, while brands used CaaStle's technology and logistics behind the scenes. For traditional retailers, the appeal was practical. They avoided building expensive warehouses or organizing dry cleaning systems to run their rental programs, and CaaStle handled all physical inventory and shipping. In return, brands secured a predictable flow of recurring subscription revenue and detailed consumer usage data. For venture capital partners, it appeared to be the perfect hybrid, a high-growth tech platform scaling a physical retail model with software-like predictability. To secure backing, the company presented polished financial statements, bank records, and corporate documents that depicted rapid growth, strong profits, and substantial cash reserves. But in private markets, appearance is not verification. Prospective investors received official-looking audit reports designed to sweep away lingering doubts. A fake audit is like showing a bank statement with a trusted accountant's stamp on it, except the stamp and the numbers are not real. Prosecutors later alleged these records were carefully forged, creating a flawless image of financial health that hid mounting losses underneath. According to the SEC, this deception was a systematic campaign spanning 6 years. Court filings show the false financial reports began in February 2019 and continued through March 2025. Prosecutors said CaaStle's apparent strength depended on entirely fake revenue and profits, using falsified income statements to secure cash. The SEC alleged Hunsicker raised more than $250 million using these fabricated audit reports. Federal prosecutors went further, stating that the scheme successfully induced more than $275 million in total investments, turning a struggling clothing platform into an alleged multi-million-dollar paper empire. Now, here is the part that makes this different from an ordinary startup failure. In October 2023, when confronted over a fake audit report, prosecutors said Hunsicker claimed it was a one-time error. In reality, prosecutors said CaaStle was financially distressed and critically short of cash. But this is where the story becomes almost unbelievable. For 2023, Hunsicker represented a $66.3 million profit on $439.9 million in revenue. In truth, prosecutors alleged CaaStle suffered an $81 million loss on just $15.7 million in revenue, an overstatement of more than 7,300%, according to the SEC. To keep the cash flowing, Hunsicker allegedly targeted secondary markets with a new pitch. Investors thought they were buying shares from existing shareholders, but prosecutors said the sellers were fabricated and the money went into the company instead. According to the Department of Justice, she pitched these secondary offerings as discounted options from early backers. In truth, the identities of those sellers were entirely made up, allowing CaaStle to secure new capital under the guise of an equity transfer. And if you think fake numbers are easy to spot, look closer. By 2024, the financial pressure forced even bolder actions. To secure a new financing round of more than $20 million, prosecutors said Hunsicker forged a board director's signature directly onto corporate stock documents. This signature forgery turned financial manipulation into a clear criminal act. Separately, she used CaaStle's supposed success to secure even more capital. She launched a sister venture called P180, using CaaStle's fabricated track record to raise about $30 million from investors. The money was raised under false pretenses, dragging a completely separate company into the expanding fraud. By mid-2025, CaaStle's cash was gone. The sudden liquidity crisis forced immediate employee furloughs, leaving hundreds without jobs as Hunsicker was forced out of the company. On June 20th, 2025, CaaStle filed for Chapter 7 bankruptcy in Delaware, revealing a business in absolute ruin. 1 month later, federal prosecutors unsealed criminal charges against Hunsicker. According to the DOJ, she had defrauded investors and banks out of more than $300 million, raising severe concerns about private company due diligence. At her sentencing on August 5, 2026, Hunsicker faces up to 20 years in prison and nearly $300 million in forfeiture. Today, private markets still operate in the shadows. As long as hype beats due diligence, the next billion-dollar illusion is already being built.